Hi and welcome to Carnegie and our interview with Fingerprint. My name is Markus Almerud. I'm an analyst here at the bank. I got with me Christian Lagerling, who is chairman of the board, and Fredrik Hedlund, who is CFO. Hi, gentlemen.
Good morning, Markus.
Hey, Markus.
So thanks for coming to talk to us. You just finalized or sort of finalized a rights issue. You communicated the final outcome on June 18th. First of all, maybe are you happy with the outcome? And could you please elaborate on what this issue means for the company?
Yeah, absolutely. We would have been happy to have 100% on the rights issue, of course, participation. I think given circumstances, we're relatively pleased being close to 60%. We need to remember that, the company has been through and now coming out of a very complicated, long and tough turnaround situation. And we know that there's a lot of concern and speculation in the market that the company is under more financial trouble and issues than we really are in any possible way. So we think that, still having almost 60% of shareholders believing in us and participating now is pretty good. Our advisor have said compared to other comparable transactions in the market, they think it's actually quite good and surprised a little bit on the upside. So, this is the fundamental step in what the team and Adam, our CEO, has been talking about for a while in a major transformation and frankly, a turnaround situation. It's about us taking control of our financial destiny fundamentally. And Fredrik, do you want to add any comments to the outcome?
No, I mean, I echo what you said, Christian. I mean, Markus, as you know, our shareholder base is extremely fragmented. So to reach 57% with the shareholder base we have, we feel really good. And I think it's important to underline the comparable rights issues. And as you said, Christian, our financial advisors, we discussed and yeah, the outcome, it looks really good and we are happy.
And if we talk about the financials, so given that it was not fully described, will the money be enough to fund the ongoing operations during the implementation of the phase you're in? Because you're in the middle of this huge transformation. Or do you think there is need for more capital?
Yeah, I can jump in to start. I mean, we talk about a 57% in terms of the subscription, but we have guarantors up to 90%, Markus, and we paid for these guarantees. So actually, we're going to get 90% of the original ask, and we have planned with 90%. So to us, it's not a surprise at all. In terms of will it be enough? Yes. And I can tell you why. When you look at our cost structure, we outsource 100% of our manufacturing. Okay, so we don't have a big fixed cost base. We don't have plants around the world. And now, when we're going through this, the right sizing of our cost structure, we're also making sure that call it the non-cost of goods sold cost is as variable as possible. So, we are able to dial our cost structure up and down depending on demand. So really, it's going to be our top line that decides, if our top line is strong, we're going to invest, and then we're going to invest hard behind growth. If we see some weakness, we can very quickly dial back. And as we've said on our investor call, our first quarter investor call, 2/3 of our cost structure, our OpEx cost structure is people-based. So within roughly a quarter, we can quickly dial things up and down as needed. So we're going to make sure it's enough. And we are absolutely laser focused to get to profitability, right? Profitability and cash flow, positive cash flow.
All right. So from what I understand, you have one larger shareholder who HCM, who's not cleared yet. How confident are you that that will work out?
So when it comes to HCM or Heights, Heights has been a very good partner for us in this transformation phase. And given the high-tech industry we're in, there are regulatory approval hurdles, which is very normal. So we're well aware, of course, together with Heights and our advisors, to manage around that. And ideally, we get this cleared very quickly. It's also summer, and I'm sure people working on this, if there is delays, we're also ready for that. So we expect a good outcome. And again, Heights, it's important to remember, is primarily a financial investor. So they're in here not as a long-term strategic investor. It's a balance to work with Heights to meet their financial goals, but also, of course, for us, primarily to look after our shareholders' best interest. So we don't expect Heights to be a long-term strategic investor in the company. It's not their ambition, to our understanding. We think he can create opportunities for us as Heights, depending on final numbers, will eventually come off our cap table as per our expectation, which could bring other opportunities for us when it comes to the ownership picture. So, everything according to plan. And of course, we're impatient, and it would be great to have all of this done immediately. But we're very confident about a good outcome as per the plans.
If we move on a bit and move away from the transaction and the rights issue, and then we talk a little bit about the transformation and where you're at and what you're seeing going forward. You announced an exclusive partnership agreement with Egis Technology in the mobile area. So you're closing down the mobile area. How does this partnership fit in with the transformation plan?
Yeah, I can jump in on that one. Well, the short answer is it fits really well. If you look back at the buckets that Adam would have shown on previous investor calls or our first quarter call, in terms of the portfolio refresh, I put a check mark around that one because we are winding down mobile, and Egis will help. In terms of the second cost bucket, which is around cost and optimized cost, our partnership with Egis will enable us to wind down faster and in a more efficient way. So that's another check mark. And finally, around strategy, we've repeatedly said that we have a patent portfolio of over 700 patents. Well, the Egis deal shows that we can monetize a part of that portfolio, and this is a part that we don't need for the future. So I think that's beautiful. And finally, also aligned to strategy is new partnerships. Like Christian said in one of the questions before, it's such a fast-moving industry. It's a very capital-intensive industry because the product life cycles are short. So working with, call it the old competitors, is part of the new future. It's part of being fast and agile. So I feel great. And I met the chairman and the general manager in Taiwan not long ago. So on a personal level as well as working out. So I couldn't be more thrilled.
Okay, and just to be clear, and maybe to repeat that the wind down will be faster with Egis on board than it would have been otherwise.
Yeah, I mean, we've said, we're going to be out of mobile before year end. Will it be before year end? But it's going to be, when you look, it's not a linear curve, right? It's going to be faster. But most importantly, it's going to be better from a client perspective because now it's a seamless handover. And we've been very good with our mobile clients. We could do just a hard and a fast shutdown, really to preserve cost. But instead, we've chosen to work with our clients and to wind down in a controlled manner. And Egis is just reinforcing this. So I think it's obviously a good story for us in terms of executing on our transformation plan, but it's an even better story for our clients.
Mm-hmm. If we talk a little bit about, yeah, sorry.
Or maybe add one comment. I think Egis is a good example of, let's say, the new strategic approach that Fredrik and Adam and the team are now implementing in the new growth phase of the company. You know, we are getting out of a very large market where we had a very large, heavy organization to support that opportunity. And, you know, in hindsight, it would have been great to do it a little bit quicker. But here we are, and our plan forward is very much driven by super efficient, cost efficient, revenue and profit focus only in mind, through partnerships, through outsourcing. Our organization is fundamentally much more lean. We've taken out management layers. It's essentially flattened. And we are super excited about that because we can see and feel, you know, how Fingerprint in the next phase can operate fundamentally differently. Monetizing IP, of course, is one super interesting area. And, you know, adding select M&A opportunities somewhere down the roadmap. You see a very different company and how it's run going forward, certainly. So we're excited about that.
And I mean, now that mobile comes out, the profitability profile will change completely. Maybe talk a little bit about how you plan to get back to profitability. What's kind of the roadmap?
Yeah, I can start on this one. Well, Markus, there's a short-term component, and then there's a long-term component, and I think both are important. So short-term is just very fast right-sizing our cost structure, because we are moving out of 70% of our revenue is mobile and it's not profitable, right? And we're moving as fast as we can while still, you know, staying close and helping our call it our legacy clients. So with this change, 70% less unprofitable revenue, when you look at our resourcing base, we can do a lot, you know. So clearly we are looking at all of our resources. We're optimizing the resources. Christian just talked about, you know, kind of right-sizing an organization in terms of managers. So we are looking at spans and layers, making sure that the organization is set up in a very agile way. We're looking at our footprint. We have a fair amount of legal entities. We're scrutinizing all of those and, you know, closing down the ones that don't add value and that we don't see as part of our long-term strategic plan. And finally, office spaces, natural as well. We are reducing our office space. So it's quite tactical. It's quite fast, short term, and that's going to get us to profitability and, you know, being able to generate cash flow. But then it's the long term, and that's obviously equally important. And we will execute on our strategy. I mean, I really believe in our strategy. We are in an industry that's growing at a double-digit rate. I think we're very fortunate in terms of the industry, the biometrics industry that we are in. We have a legacy, a reputation, and there's no reason why we can't be a winner. We don't have to be the biggest company, but we can be profitable, produce cash flow. We can grow in line or faster than the industry. And when we do that, it's going to be a massive success story. So, I mean, we are just laser focused on all of these things. And just my final point, you know, just to show how we're thinking now with Adam and with the board is, you know, we know that our cost of capital is relatively high given the size of a company, and we can't take on a lot of low interest debt. So with a fairly high cost of capital, we have to be very diligent in every project that we invest in to make sure that at least the majority of projects return on invested capital that's greater than the cost of capital. And this is the basics of business, you know, and I think that's the focus that we have on a project by project basis to make sure that we meet the return hurdles needed. You know, that's fundamental because every project is going to build. It's going to build and build, and then your income statement is going to be correct, and then your cash flow statement as well. You know, it's kind of the natural blocking and tackling of business. And it was hard when we had mobile in our product portfolio. You know, it was the choice of where to invest. it was just fairly hard because we had to maintain a very large size of our business. And it's not clear if every project, returned a return ahead of the cost of capital, and unlikely so, given what we see in the P&L and the resulting cash flow statement. So I think that focus is going to be a big enabler for us to return to long-term sustainable profitability.
And maybe to talk a little bit about revenues, because we have this big area, biometric payment cards, which could drive revenues significantly, I guess. Do you still believe that this will be a mass market, and will you be able to capitalize on it?
I can make one comment and fill me in, Fredrik.
Yeah.
I mean, we are exceptionally well positioned to address the payment card market when it scales. You can say if and when it scales, because I think there's been a lot of early promise. We've won a lot of pilots and first commercial deals, so we're certainly, we feel ahead of the market and one of the real leaders in this opportunity, but it hasn't really scaled to maybe some of the early expectations. So as you hear with Fredrik's very stringent financial discipline, we made sure that we've right-sized really the cost structure, our team and our efforts in this business area to, number one, absolutely be ready to go after this as it scales. But number two, be able to survive and defend our leading position as this market is continuing to go a little bit sideways, a few steps forward. So yeah, we're very excited about it. We're not investing significant amounts or certainly burning significant amounts of money, waiting and hoping that this is going to scale. When it's there, we're certainly going to be there and profit from it. I think you're going to see the new Fingerprint over the next coming quarters and years make, much more significant revenue and profits in other business areas. Some that we're getting into, but also completely new areas that fit into our strategic roadmap. So, yeah, we have a mixed view, but we're certainly ready to monetize when it's ready.
And talking about new areas, so you're cutting costs significantly, and you also get a much smaller R&D organization. What are your thoughts about expanding to new areas with this much smaller R&D spend and organization?
Yeah, I can start on this one. Markus, I think a size of an organization doesn't necessarily translate into output of that organization. So yeah, I think that's the first one. As I said before, in terms of R&D, we keeping our core, and there's a few things that we are best in the world, and we're not selling, shutting down, or monetizing that in other ways. So the core stays with us. I also mentioned that we are flattening our organization, and we're removing management layer positions. That is also true in R&D. So I think that's another enabler. And with a small core R&D, we can contract in non-core expertise on a contractor basis. So it's just, I think a smaller R&D fits into this, more variable cost structure, smaller footprint, and the new FPC that we're talking about. So I'm not concerned. I think it fits perfectly with our transformation plan.
Yeah, and maybe just add one comment. I think this is it. We're doing things fundamentally much more efficiently going forward, which has been the core part of this turnaround and transformation plan. It's an absolute goal for us to reach break even, stop any cash burn, and start to generate cash, as Fredrik has alluded to. We should still remember, though, for the long term, we're in a high growth industry, double-digit growth, as Fredrik mentioned, and we see so much opportunity. So we won't roll out that at some point, as we get deeper into some of our new business areas, that we may want to accelerate investments. If you look at the average company, let's say in this industry on a growth path, you probably see that they invest perhaps more money in periods well-financed to go after a larger market opportunity, take a bigger market share. So we're very excited to, of course, these are decisions that all of us as shareholders in the company make, and given circumstances when the timing is right. So that's also for, evaluation, constant evaluation, and when the opportunity is right, when shareholders want to, we can see, further acceleration under the right premises, without a doubt.
And then maybe to round off, Christian, since we have you with us today, talking about the board, given the big transformation that the company is going through, should we expect more changes on the board?
With this rights issue, the ownership table will look quite different. So we're going to have the first complete list coming out, I know, quite shortly. And there could be, of course, new ownership groupings that may have, let's say, influence ambitions on the board, and we need to be, of course, open-minded to that. Fundamentally, I and the board would like to continue to deepen and broaden the expertise in our industry, and also our, let's say, slightly changing industry into more of the cybersecurity software side of biometrics than perhaps the sensors and the hardware that we've done historically. And I think we're going to have a lot of opportunities to do that. We've been through a difficult turnaround phase that we're really coming out of now and seeing the first evidence. And that's also quite difficult as an outside perspective board member to make an assessment exactly where you are in that phase. So I feel that coming out of this here in the fall, that there could be great opportunities because we have a much more clear, clean platform to grow this company from under our new strategy. And then, as a public company in Sweden, we follow the rules of the election committee, which is best practice in the industry, and we intend to continue to do so, effectively meaning that I, as chairman of the company, have a seat around the table, and then largest owners are asked if they want to participate to represent their ownership interest. So I can just mention that the work in the committee has been very good and efficient, but I think perhaps the window is opening up more to add the type of talent that we'd really like to see on the board. So long answer, but I think the short answer is yes, we'd love to do that, and I think there's a window of timing opening up.
Gentlemen, there seems to be a lot going on. Certainly expect more in the near future. So with that, to be continued, I thank you very much for today, and then speak to you soon.
Thank you, Markus.
Thank you very much, Markus. Happy summer.
Same to you.